Hey guys, this is Aiman, and it's been a while since I did a recap on YouTube. I think it's been around a week. Not that I didn't want to do any recaps, it's just that, as you know, I moved around to a new apartment on Thursday, so I didn't trade on Thursday, I didn't trade on last Friday, I missed Monday, I missed Tuesday, and I started trading back from Wednesday until today. I'm having a lot of free time today, so I thought I'll do one recap. And hopefully tomorrow, Saturday, I'll do a video on the new trading station I built. So yeah, let's start with that. Today was actually a good day. It was a good day, and I'm at my goal, even above my goal, but I'm not really happy by how I managed my trades. Every trade I've taken was managed really bad. So let's go through those. First of all, Uber has been in play last few days, and you could see that by the volume in comparison to what we had on the previous days. Today it was sitting exactly at the breakout area, and I told myself that if we break the high, we might run right there. Now look at the 60-minute chart. The 60-minute chart as well, it looks like it is sitting in some sort of range right there. You could see it right here. 1 week, fake breakout maybe, or whatever. I think, yeah, this one we traded it for an up in range breakout. Thor did it, Brian took it, I took it yesterday. It was amazing actually, but it was only 1 minute pop up and then it just dumped down. But anyway, today, look at this 60-minute chart, and I told myself we're making a new high right there. It would be actually exciting to take it for a long side. Now the 5-minute chart is the same ABCD pattern right there, and I'm taking it for a 5-minute on a new 5-minute high, and mainly my decision was based here on the 1-minute chart. Let's take a look at the 1-minute chart. I told you my favorite open range breakdowns or breakouts are those which sell off at the open and then they get squeezed back up. I want to see the power of the sellers, and I want to see the sellers getting wrecked by the buyers, just to give me a little bit extra confirmation that it might do whatever I want it to do. Next candle, it breaks up, it's breaking up. I'm taking it to the long side, and at the break of the range, my stop loss is usually the middle of the range, and I get stopped out. Mad? Not really. I see that it's actually working. It's getting both back up. It did a new 1-minute low, but it's getting both back up, which gave me the confidence to take it to the long side, add at the breakout, partial, exit the rest at break even. I'm still up with my plan. I still believe this thing could be an actual or a decent long. I see the range which we have right there, and we are still not selling off. So I told myself, let's give it another try. We're selling off, new red candle, getting engulfed by the white candle. I take it to the long side. Since I'm still within the range at the open, basically the high of the day was up there, I am taking it to the long side here, and I put my stop loss at the low of the day, just as a precaution. Now we're breaking the high of the day. I'm adding to my position, moving my stop loss to my previous entry point. My average becomes somewhere in the middle. That is my risk, and I start partialing at around 2-to-1 more and more, and this is where I mismanaged my trade. So I decided to exit all out right there. Why did I do that? I have no idea. Looking at the 5-minute chart, you see that the stock got extended from the 9-moving average in the 5-minute chart, and if you watch my ABCD pattern webinar, ABCD type 1, stocks which make strong move at the open or even later on the day, they consolidate, thank you, they consolidate and go sideways till the stock touches the 9-moving and the average, the 9-moving average in the 5-minute chart, and then they bounce back up, or they pull back to the 9 and then bounce back up. But it's so rare that it will do this and then continue going higher. Moving average is an average for a reason. Stocks are being traded, or it acts as a magnet, and stocks are being traded closer to those moving averages, right? If it's getting so extended, it needs a little bit of correction time before continuation. I knew that that might happen. I still didn't respect my rule. Should have waited for it to go to the 9 and the 5, add to my position, and continue going higher. And that's how I usually manage my trades. If you follow me on Twitter, you could see I do that a lot. NIO 60-minute chart, you could see that the 60-minute chart was so strong. Yesterday it sold off, right? And today it's coming back up. Wasn't the cleanest day chart on the 60-minute chart, but it wasn't the worst. Let's just remove all the nice little lines, they look ugly. Now, daily chart on a nice uptrend, right? 5-minute chart, you could see the range which we have right here, right? At the open, we're selling off, we're breaking this low right there, and we're getting into that range, which is here. So at first, we're breaking the range, we're retesting, we're continuing. When we break a range, I love seeing retests. So breaking the range, retest, continuation. And then if this is a healthy pullback, it should just simply retest and continue. Or I'd give it a little bit more room to the half of the range. If it goes more than that, I'm interested in taking this into the short side. So if it dropped inside there, which it did, I'm interested in taking it to the short side. Unfortunately, or maybe actually likely, it's getting squeezed all the way back up, which shows me that buyers could be actually in control. I'm taking it to the long side and my stop loss is down there because I'm getting in within the range, right? Once we're breaking, I'm adding to my position, taking some partials in. Unfortunately, it didn't work out really well. I exit the rest a little bit below the average right there. PLTR. Another stock I traded, which was also good but mismanaged. Daily chart really strong. Let's just remove these lines. I'll just draw them again later. 60-minute chart looking really cool. If we break, might be a nice long. I missed the entry actually, which is fine. At the open, it's selling off, which is why I just avoided. I want to make sure that we are actually going to break out. We are breaking out. I'm taking it to the long side on the 1 minute chart. It's also a new 5-minute high, so 5-minute open range breakout. My mistake, after the breakout, the retest happened, but I missed the add, which just made me a little bit confused. After the breakout, my stop loss was the middle of the range. I needed to add to my position, and I get mad that I missed this add, and I told myself just let it be it. I built on the trade. This wasn't a good winner. It was, let me check how much was that. That was around 0.3R, and I never partial 0.3. Usually my first partial is at 2 Rs. And so yeah, another badly managed trade, which could have been a good winner. PTON. This one wasn't bad. I mean, after all, it was around 1.5 R, but still, again, badly managed, right? Daily chart, decent for a long. 60-minute chart, let's just remove all the lines again. 60-minute chart, on a new 60-minute high. We had a consolidation down here, we're breaking up. You see this range right here, we're breaking up, and we're having room all the way up there, which is what I liked about it. 5-minute chart, same thing, sort of range right there. We had a break, a fake break, and then came back down, which made me a little bit cautious trading it. But the 1 minute chart looked really good. So we're breaking up and we're selling off. We're selling off and we're holding around the middle of the range. And if you remember, I told you that stop loss after breakouts is the middle of the range because stocks could go into the middle. Getting bought, getting bought, getting bought, getting bought, getting bought. A lot of buying pressure right there. I take it to the long side. Stop loss at the low, adding at the breakout. Stop loss somewhere in the middle. Average becomes somewhere right there. After I doubled my position, that is my risk. That's my reward. Really good. But look at this. Retest. Should have added and continued, but I exited. See, another trade which was badly managed. Not really proud at how I traded today. SPCE. Same thing. 60-minute chart looked good. Daily chart looked good, right? 5-minute chart breaking the high of this small consolidation right there. Bouncing of the pre-market high, going against me, exiting it for R, full R loss. Mad about it? Not really, it's fine. This was a good trade in my opinion, but didn't work out well. TLRY, this is the trade I've taken with you guys in the afternoon when I was on the microphone. Why did we trade TLRY? Mainly on the 5-minute chart. It was an ABCD pattern, if you remember the ABCD pattern webinar. ABCD pattern. After a parabolic drop, we wait for W shape. This is ABCD type 3, right? I'm taking it to the long side. This entry right here was bad. The good entry would have been there, or at least around here once we break this range with a stop loss in the middle, and then we could go easily for a 2-to-1. You could see that my entry on the 1-minute chart, it was a little bit late, which is why I didn't take it for a trend. I took it for a quick scalp. So I'm taking it to the long side with the momentum. A little bit of slippage should have get in right there. Partialing all the way up, right? But getting a lot of position right here because it just did a fake breakout and it just doesn't run. After breakout, so you want to see stock at least running a little bit, right? Didn't do that. Took a big share size out and I exit that last position exactly on time. Let me see what else I've traded, and I think NIO we discussed, PLTR we discussed, PTON we discussed, SPCE we did, TLRY we did, and Uber we did. Okay, that is it for today, guys. I hope you all have a great weekend. If you are not following me on Twitter, make sure to follow me at Aiman BBT. I break down my trades on daily basis right there with some explanations. If you have any questions, feel free to email me, Aiman@beerbulltraders.com, and that's it. Bye bye.